This is Amit Pabari, founder and managing director of CR Forex. We have got a lot of calls from exporters. They have been asking us one question, that what is trade deficit and is rising trade deficit a bad signal for the economy? So in the first part of the presentation, we'll be answering that question, and in the second part of the presentation, we'll be discussing what is the outlook for dollar rupee pair for the coming days. So now let us understand what is trade deficit. Trade deficit is nothing but the difference between export of the country and import of the country. For example, in the month of December 2021, India had export goods worth 37 billion and import goods worth 58 billion. So the resulting trade deficit for India for the month of December 2021 is close to $21 billion. Now a lot of people say that agar trade deficit is increasing, is it a bad sign for Indian economy? Now let us go a little deeper into the numbers. If we see India's export in last 1 year has increased by close to 40%, and in the same time import भी करीब 42% से बढ़ा है. Now if the export of the country is increasing, it signals that the growth story of India is intact. If import of the country is increasing, it means that consumption story of India is intact. और दोनों डेटा से अगर एनालाइज करेंगे तो GDP of the country is on a growing stage. Now, then the question is what impact it will have on the currency of the country which is having trade deficit. In case of India, if we are into net import, then we will have higher dollar demand, and generally whenever the trade deficit data increases, the currency of that country has to weaken. Now let us move to the second part of the presentation, that what is the outlook for dollar rupee pair for coming days. Despite dollar index falling, we expect that there is a 90 to 95% probability that 73.80 to 73.70 will act as a support for dollar rupee pair, and the pair should move towards 75 to 75.20 in coming days. There are basically three reasons for the same. Pehla, we have seen RBI intervention strongly at 73.80 to 74 zone. ये पहला reason है. Second reason is that our trade deficit data and inflation are rising. So the country currency should ideally get weakened from here. And the third reason is that most of the states are going for an election. So we will expect some kind of volatility in the currency. So basically 73.80 से लेके 74 will act as a strong support, and the pair should move towards 75 to 75.5 level in coming days. Now let us discuss what are the strategies for exporters and importers. Let me start with thin margin exporters. Thin margin exporters like chemical exporter or agri commodity exporters, they must have taken costing close to 73-75 से लेके 74 के बीच में costing लिया होगा. They can wait with a stop loss of 74.05 for a target of 74.50. First target is 74.50, and for second target they can wait for 74.80 and 75 levels. Now let us discuss thick margin exporters. Thick margin exporters like engineering goods exporter or textile exporters, they have covered aggressively between 75.5 to 76.30 level. We are advising them to wait for their export booking, and whenever the remittances are coming, they should pre-utilize all the forward contracts which are on profit. Now let us discuss the strategy for importers. Importers ka mostly costing will be close to 75 levels. They should effectively use this dip as a buying opportunity, and we suggest them to cover aggressively till April end, because अगर वो April end तक का भी cover करते हैं close to 74 से 74.20 with premium, they will be covering below 75.20, which is a good level to hedge for imports. With this, I will end my today's presentation. Jai Hind, Namaskar, फिर मिलेंगे next week. Thank you.